Okay, hi everyone, and welcome to the Friday, April 23rd installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone, and I'm here with special contributor Scott Budman, technology reporter for NBC Bay Area. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove, and our host, as always, is the Silicon Valley Business Journal. So, Scott, interesting week, kind of a bizarre week. And maybe a sign of a fundamental change taking place. Netflix. The big story of the week is obviously Johnny Depp and Amber Heard. That seems to be more important. I used to wonder how, World War II would break out. The boys would be leaving, they'd be taking off in troop trains, and people would be listening to Fibber McGee and Molly on the radio. And I thought, how did all that work? Well, now I know. Massive things are taking place in the world. Russia just introduced an undetectable ICBM for its nukes. And we're watching Johnny Depp and Amber Heard, every day, all day.
Yeah, lest we get off track. Right. But this has been a big week for tech too. And
yeah, that too. So Netflix.
I think Netflix is the big story. For what it's worth, I've seen Johnny Depp on Netflix, so perhaps there's some confluence there. But no, it's the big story. I don't think it's a shift in terms of, the streaming days are over. But I think Netflix's dominance really, really took a massive hit. Netflix was one of those companies that was recession-proof. It didn't matter what the economy was doing because we were still streaming stuff. If the economy was good, people bought Netflix stock. If it was bad, we stayed at home, we huddled up, we nested, we streamed Netflix. So it was in there kind of like a Starbucks is one of those companies you could just count on to dominate. And we talked about in recent years, there's competition. Boy, Netflix seems a little more expensive than the other guys. It's kind of a one-trick pony. All of those things came home to roost. Oh, and by the way, 100 million people are using it without paying for it, because there are siblings or boyfriends or whatever. And that just all came crashing down in one big earning report.
$700 a share to, the last I looked, 270 in a matter of days, almost hours. That's an amazing, all because of the quarterly earnings. Were they that bad? Or was it just a sign of things to come, an augury?
Well, I think both, because the $700 stock price was during the pandemic. It was a recent, within the last 12 months, and it had fallen down quite a bit because I think a lot of the pandemic stocks had given up some of that. It's a weird word to use in a pandemic, but that euphoria where people were buying Peloton and Roku and Netflix.
Everything for the house. Yeah,
exactly. And that made sense for it to drop back to say, hey, let's get back to some real world levels. But then the earning report came in. And remember, you talk about missing expectations. Wall Street had estimated a gain of 2.5 million subscribers in the quarter. The company lost 200,000 and then predicted a loss of 2 million more. That's catastrophic. That was a huge chasm. And that's why it fell all the way down. It lost 35% of its value in a day this week. And this is Netflix. This is a company with a lot of shares out there that's been public for a long time. This is not some fly-by-night biotech stock. This is Netflix just getting hammered.
Yeah. Do you think there was good publicity? I reading the announcement and all that to announce that, we do such a bad job of reaching all of our viewers that there's 100 million people out there that are free writing on our service. Does that sound good to you?
I think what had happened was the message from Netflix was, we're doing so well, it doesn't matter that your teenage daughter in college is streaming it, or even your ex is streaming it, not to mention family members that live in different states. It even put out a tweet saying something like, love is sharing passwords, like, hey, let's just share because our bottom line can take it. And then to suddenly admit in this already disastrous earning report, hey, it turns out our bottom line can't take it. We're going to fight that. You won't be able to share your passwords. And by the way, we might even advertise, which was also sort of a sacred cow in the Netflix.
Yeah, absolutely. I think there's one other factor too. I think there's an element of fatigue. I hear from people, I read comments. My youngest son is constantly saying this. There's not enough new content. on Netflix. And the stuff they create internally, half of it is crap. You don't want to watch it anyway. So, I mean, there's no easy way out of this, it seems to me, for Netflix.
No, there's not, because the competition's just going to get tougher and tougher. The Disneys of the world are going to buy up the Marvels of the world. The Apple Pluses of the world are going to spend so much money on new content. I remember it wasn't that long ago, I'd go to these tech and media conferences, even Comdex, and Netflix was the belle of the ball. Everybody wanted their content. Remember, content is king. Everybody wanted their content on Netflix. And now, there's Hulu in there. There's Apple Plus, there's Disney, there's Peacock, there's Amazon Prime. So many bidders for that content now that Netflix, although it's always been willing to spend money, is by far not the only one anymore. And you're right, it's starting to look stale, and you're starting to see some of these hot properties on the other streamers. And by the way, those other streamers are cheaper than Netflix. That's a deadly combination.
And they got hit by the penumbra of this. When Netflix fell, every other streaming service tumbled too this week.
A little bit, yeah, a little bit. And I think that's just
not like Netflix, but nevertheless, it was like, oh, maybe the bloom is off the rose of all of streaming video.
We're also starting to see movie theaters do business again.
Yeah.
Some of these films that are debuting in theaters are starting to get almost pre-pandemic numbers, for opening weekends. And Hollywood loves that because that gives Hollywood two options now, the theater and the streaming. And for a couple of years, it only had the streaming. Also,
we can see a shift back then to, Hollywood. Two things happened in Hollywood with the arrival of Netflix and then the pandemic, which was, one, we've got a gold mine here because we can, every studio in Hollywood, every indie producer out there was thinking, we'll sell to Netflix. They're buying everything. So we may see a pullback on that. But I think the other thing was production companies also, and studios said, we can open our movies on Netflix and still get good numbers. Now, the profits may not be as high as we get from theaters, but if everybody's going back to the theater, are we going to start seeing movies premiering again only in theaters for a few weeks and then on Netflix?
I think the short answer is yes. I think once people are willing to go back to the theater, you're going to see movies aimed at the theater. And it was interesting to me, and I hadn't really thought of it until watching the earnings call for Netflix, but Netflix is one of the Silicon Valley success stories. You can't knock it. Much like Pixar is sort of our movie studio here in Silicon Valley, Netflix is our movie streamer here in Silicon Valley. And yet you look at the Silicon Valley movies that were made specifically for streaming services, on things like Hulu and Uber, they all went to other streaming services. They went to Hulu and they went to HBO and Apple. And even that, I think, says something just about the number of services out there that can bid for these things and that can pay for real productions with real actors and real directors. And it's not just Netflix. And Netflix is still going to come up with its hits. That. But there's just so much competition out there. And I think the two things that Netflix has to do, and it surprises me to say this, but lower prices and then offer a free advertising supported service, which the other guys do. And that's, we just haven't seen that before. So it'll be interesting to see in that world if Netflix can still thrive.
That's an interesting big business play. If you can build a business without advertising and keep that in your back pocket for the day when things go south, and then you can haul that out. I've never seen it written up in Harvard Business School or anything else, but that's a very interesting, scalable 21st century business philosophy.
Yeah, we'll see. Because look
at YouTube. Look at YouTube. Right. It's buried in commercials now, but they scaled it up without commercials, and then now they introduce it, and everybody goes, "Yeah, I guess I can live with that." There's no real great alternative.
Yeah, that's a great example, and that's what we're going to see in future Netflix reports: is how it did with subscribers, the ones who pay, but also how it did with ads. And that's going to be something new that it will break out. I mean, even Amazon's breaking that out now. So why not Netflix? But we'll have to see if it can pivot to that successfully. And boy, did it come down from a lofty valuation in a very short period of time.
Very sure. How was, I've been on a number of earning calls in my life. How was this one? Because you see these companies that they do the earning calls and are just triumphant because they're in the growth phase and they're unstoppable. And, all the questions being asked are very, upbeat. And then you have these calls, which did Reed make this call, or did somebody lower level in the company have to take the bad news out to the world?
No, I think if I remember, it was Reed, at least on there. And yeah, I mean, it started fairly optimistically. Hey, we still have a lot of people tuning in. We're still the leader in this, that, and the other. But, to have to admit, hey, we're now looking closely at ads. And hey, contrary to what we literally just tweeted about, how lovely it is that we all share subscriptions, we can't do that anymore. And we have to sort of try to crack down on that. And that really was, and deservedly so, the headlines from the earning calls was Netflix having to take a couple of steps back to try to repair the damage to its valuation.
It's interesting. Roku fell too in part of this. That's because Roku, it seems to me that's kind of a different game.
Yeah.
So it seems like this malaise that everybody was sensing spread out much wider than just the blast zone of Disney and Netflix. It'd be interesting. Is there anything left that hasn't, any high flyers from the pandemic that haven't rolled back, that have actually held on?
Yeah, I can't think of any. I mean, maybe Amazon, but Amazon was already how we shopped. Right. So I don't know if that counts. But look, if Peloton had competitors, those competitors would have taken a hit too, right? The drug companies, when people started to feel better, the vaccine companies, the Modernas and Pfizer's, they all took a hit at the same time. Still lofty, but not quite where they were. Same with the streaming companies, same with the gamers and pretty much anything software, just because, and look, this is good news. People are able to get out again. They're able to go to movie theaters. They feel confident about dining out. Yeah. And so I think we're still in a world where we've developed, obviously, online shopping as a habit, but food delivery is a habit, streaming movies is a habit. And these things, even home fitness, I know a lot of people my age and younger who say, no, I'm not going to go back to a gym. I've got this whole setup in my den or whatever. I mean, habits change. And so those lofty valuations, it makes sense for them to come back a bit. But Netflix, I think, is an outlier as to how hard it got hit and the damage it took.
I remember 2001 when the big crash hit, the bubble burst. One company got through it in great shape, which was, oddly enough, Intel. And they stayed high flying for another year. And it looked like they were going to be the only company that didn't get hammered by the dot-com bubble bursting. And yet eventually at a certain point, they fell too. So I'm asking, and I don't know if there are any companies that are still flying high that because of the pandemic, and they're still flying high now, even as we go back to a normal world.
I mean, you mentioned the chips, and I don't know that the chips were completely a pandemic play, but they did pretty well because we were upgrading all of our hardware. Now, we may not be upgrading the hardware as much, but there's a chip shortage. So look at NVIDIA. I mean, that's an incredible play. Look at Applied Materials, a normally sort of background boring company. They're doing really well again. I don't know that that's pandemic related. I think that's because of the pandemic. We now have this chip shortage. And that means these companies have to ramp up super fast. But chips, and we've talked about this before, are really back in play as kind of an exciting, sexy play because everybody needs them now. And now it's not just hardware that we have at work, it's our cars and our refrigerators and everything else.
And ironically, when you go back to work needs new infrastructure too. Yes. New servers and all that. You got to upgrade them. You haven't done that in a couple of years. So, maybe they are the one contracyclical, which was ironic because they were the very embodiment of a cyclical industry, every 4 years up and down.
Good point.
Okay. We're recording this on Thursday again because you're going back into the courthouse tomorrow morning. Tell me about the Sunny Balwani trial.
There's so much less to talk about Sunny Balwani than there was with Elizabeth Holmes. Most days I'm the only reporter in there now. The one thing that sticks out, and it surprised me from the beginning that Balwani was willing to go into court and have all this public after being dragged in the Elizabeth Holmes trial so badly. Now we're seeing what else? More text messages. But unlike the prosecution in the Holmes trial, who was trying to establish a relationship between the two, so the text messages were, warm and loving, and in some cases a little too warm and loving. These text messages that they're introducing now are Balwani texting Holmes saying, "I'm running this company. I'm in charge here. I'm handling the Walgreens deal." They look very bad, given that his defense is, "Oh, I was just a shareholder. I was the money guy." These text messages are from a COO that's in charge. You'd expect these text messages from a Sheryl Sandberg saying, "I'm running this show. I've got this. I'm handling it." And that, to me, is pretty damaging, given that the Balwani defense is, "No, I was just investing."
Right. But, can you convict somebody? If you could convict somebody for being an asshole, half of Silicon Valley management would be convictable. They'd all be doing time. The question, it seems to me that Balwani's defense ought to be saying, yeah, the guy he was a blowhard, he was a jerk to his subordinates. He claimed more than he really had, and that ultimately Elizabeth Holmes had fiduciary responsibility. She was the CEO. She was in charge. If she didn't want to rein him in, that's on her. His job is to do the best job he can. Yeah, he got a little bit over the line. That's what the defense would say. But can you convict a guy because he claims that he's a hotshot and he's not as big time as he thinks he is?
No, you can't. That would be the obvious answer. But there seems to be a bit of a line in the sand between the two, Holmes being the money person. And again, the 4 counts that she was found guilty of fraud on were against investors, not against the patients who took the tests. But Balwani was, as they're starting to show now, intimately involved in the Walgreens deal. That's where those machines that faked it gave the wrong information to unsuspecting patients. And it's interesting because it's fairly early in the trial. When I left yesterday, they were on their second former Theranos lab director. So they're clearly trying to say, okay, Holmes was handling the investments because she was the one who was persuasive and all that stuff. Balwani he seems to be the guy in the lab. And if you look at even the dropout, he was the guy in the lab in all those scenes. If they can prove that, maybe they don't get the 4 counts of investor fraud that they got Holmes on. Maybe they get the 4 counts of patient fraud that Holmes was found not guilty of.
So the patients are listed they are the aggrieved parties in this.
It is fraud against them. I don't know that they have any recompense coming, but there was that sort of second wall between Holmes and the patients that the jury said, this is why we found her not guilty of that. I think that wall may have been Sunny Balwani, and that's what they're trying to prove, that he was the one that handled the labs and the machines.
Well, that'll be interesting. That'll be interesting because, in a sense, on the record now, legally, the patients were not victorious, while the investors were. So now the prosecution is trying to say, oh, but they were victims of this guy.
Yeah, and we're going to hear from them.
But in the back of the jury's mind is, well, wait a minute, they didn't get him on the last time around.
Well, if the jury knows that, yeah, but we will hear from the patients as well.
That. All of America knows that.
Perhaps so.
Yeah, how many viewers did you have on your tweets of the trial for Elizabeth Holmes from other countries?
A lot. People were fascinated. People were fascinated with that. And there's less of a fascination with this. And I get it. We've talked before about why that is. But there are still people who are angry at Theranos. And now that the dropout has come to Hulu, all of a sudden I'm getting questions about Sunny Balwani too. And that's what it took, strangely enough, because he was still kind of an unknown commodity up until that show dropped. And now people are saying, he was the boyfriend. So, we're starting to hear a little bit. I just don't know where this trial goes and if it goes to a conclusion, because there's just so much less of attention being paid to it. And it seems like they're really narrowing down what they're trying to get him on. And so does he cut a deal between here and the end, or like Holmes, does he take this to the conclusion? Who knows?
Okay, Earth Day.
Yes.
Uh, it's like I said, we're recording on Thursday. It's tomorrow, but we'll pretend it's today. Uh, okay, some interesting. Well, first of all, who do you think are the green winners in Earth Day?
I think in terms of Silicon Valley, we've seen obviously Tesla, the solar companies did well. They've been around for a long time. They've been public for a long time. They've got some momentum. It's obviously a fight with other countries jumping in, but that's going to happen to Tesla too with more EVs. And it's good news. I think you're a winner in my book, not just because you have a strong stock price and a lot of sales, but because you've been influential. Solar companies like EV companies don't need to advertise so much as get the good word of mouth. People in my neighborhood are putting up solar panels, so I'm going to look into it and, oh, I'll put up solar panels too. You see a lot of that. And so those are I think the clear winners out of the gate.
Get power storage. I mean, the battery world, people it's going to burst onto the scene very soon. You've got all these companies out there that are racing to brand new technologies that are very, very efficient. If they manage to pull it off, it's going to change everything because we're not going to have all that waste. That's going to save power.
Right. So, and I would put the battery companies in the potential winner category. We haven't quite seen their debut yet. So I would put the battery companies in with, say, EV trucks, like Rivian and the Ford F-150, other EV companies that are about to make their debut. And I'd love to see that succeed as well. And so we're seeing a lot of those companies that are green. Also the charging companies, the charge points of the world. Yes. We obviously need to see them as much, if not more, as we see gas stations, right? And we need to see them in apartment complexes, and we need to see them in workplaces. So that's a potential winner.
We need them in the wide open spaces of the Midwest.
That too, yes. We need to see them where gas stations are, and we need to see them work faster, and we need to see them all over the place so that people feel comfortable saying, sure, I'll get an EV because I don't have to have range anxiety anymore.
Okay, let's talk about the losers. And one of the losers, I just read this yesterday. It astonished me. According to the American Lung Association, the U.S. saw the highest number of very unhealthy and hazardous air quality days between 2018 and 2020 than it ever had before. So, it's getting worse after a steady 23-year decline in U.S. pollution levels through 2017. The American Lung Association's State of the Air 2022 report found a sharp uptick in pollution. More than 9 million more people were exposed to deadly particle pollution spikes than in last year's report. And now 137 million Americans live in counties with unhealthy air. I can keep going. It just gets worse. But one of the things that interested me was the worst 5 areas for short-term particle pollution were in California. In number 2, I believe, was San Jose, San Francisco, Oakland Bay Area. And they're not sure it got any better the last couple of years because, maybe because people weren't on the highways as much, but we were using tremendous amounts of electricity. So, on this Earth Day, things maybe aren't getting better like we started getting used to since the beginning of the century. And that raises some problems.
Right. And it's too bad because we lead the league here in the Bay Area in things like EVs and solar panels, but we need to do a better job of it because we also probably lead the league in traffic jams and pollutants.
And that's back. You've been on the freeway, with your job, you're on the freeways all the time. I'm sure you've noticed in the last 6 months, we're going back to status quo ante in 2019. I mean, the freeways are filling up. The city streets are filling up. Yeah.
Yeah, and now that I'm seeing a lot more cars, I'm seeing more EVs, obviously, but you can't help but say, gosh, look at all these cars that are still putting out emissions. And that's on the EV companies. That's why I say the whole industry doesn't classify as a winner yet. It classifies as, hey, there's a lot of potential there. And, I just did a story on tech startups that are getting into the green world. And I was very encouraged to see, I think it was $40 billion in venture capital money. I track a lot of VCs here on Sand Hill Road. $40 billion last year for the year in VC green funding for green tech startups. That doubles the year before. If we continue to double and continue to grow,
hopefully we'll pay off down the road about 3 or 4 years when these startups take off.
right. And, I mean, it's about time that we say, look, we have enough dating apps, we have enough startups that do whatever it is that's doing whatever they do. We just need to start focusing on climate. And, we need that creativity to start focusing on how do we bring those numbers that you just said down, and how do we clean things up while still allowing us to be productive.
Okay, moving on. We have our endless Elon Musk stories. Last week was Twitter, and probably next week will be Twitter. Right now, Tesla just released its numbers this week, beating both revenue and earnings. $118.7 billion in revenues and $3.22 per share for the first quarter. Those are impressive numbers. Now, the real question is, can Tesla keep up with that demand?
I mean, they're trying to, and one of the reasons investors still love this company is they just opened up new production facilities, and in some of the hot markets too. So I think Tesla, despite this supply chain concern, and despite the chip shortage, somehow is still firing on all cylinders, when some of the other car makers that have been doing it longer and should have even more access to chips and technology are struggling. And it's hard to imagine a day when we'd say Tesla is cranking out EVs at a higher pace than the other guys, because that was supposed to be Tesla's, Achilles heel was A, they keep missing deadlines, but B, they can't possibly create enough demand.
Well, GM can scale up and outproduce anybody in the world. Exactly.
And yet Tesla is just creaming everybody when it comes to putting electric cars on the road, because they've been doing it for a while. I don't know when this run stops, given that we're still going to see a chip shortage and a supply chain shortage. Even Musk in the call was honest enough to say, hey, we're still facing headwinds when it comes to not just chips, but the materials needed to make the cars, and batteries. So I don't know how long this run can continue, but this earning report was really impressive because it came up with a lot of growth at a time when it's hard for car companies to grow.
And the stock went up, providing Elon with more money in case he needs it to buy Twitter.
It's interesting because he made this tender offer to Twitter that actually was a higher offer, even though he said just the one offer. We knew he was not telling the truth. But it also gives a little bit of a window into, well, he can't just sell the Tesla stock. He's got all these loans on it's a complicated thing, apparently, being super rich. And we should all have such complications.
Twitter had good numbers too, which could be beginning to move the stock out of reach for Elon. It's kind of a range.
It's a range, and it's complicated, as I guess Tevye and Fiddler on the Roof would say. I wish we all had such complications, but I don't quite get how he's going to come up with this. Apparently, there are some funds that are in there putting in money, maybe Jack Dorsey to buy Twitter. So maybe that's the compromise he makes. But as far as Tesla goes, it's firing on all cylinders. And if you're a Tesla investor, you have to be pleased, if not a little bit concerned, that Elon has yet another distraction. They also had a big funding round this week for the Boring Company. So that's now a multi-billion-dollar company to dig holes in the ground. I don't know where it stops.
One more story. I don't know if you saw this SpaceX story. Apparently, the Russians tried to take out the Starlink array over the Ukraine with an electromagnetic pulse device. Now, given the quality of Russian equipment that we know now, maybe it was just a microwave oven with the front door open. But apparently they tried to take out Starlink, and Elon and his team, by moving the terminals around and doing everything else, managed to defeat it. So, and this Pentagon apparently is studying this very closely, because this may be the first real EMP attack. And we've now seen the first countermeasure, and it worked. So that's another thing for Elon. Yeah. This guy's just capturing more and more bandwidth of human imagination.
Yeah, he's busy. And call in the Space Force. Let's go get him.
Another augury of the future, perhaps. The Apple store workers in a mall near Atlanta have filed for a union election with the NLRB. That's the very first Apple facility that there's been an attempt at unionization. So
Yeah, we've talked about tech workers unionizing, and I think we're starting to see a pattern. And correct me if I'm wrong, Amazon unionizing. It's a very wealthy company whose executives make millions and billions of dollars with stock, but that doesn't trickle down to the workers in those factories. Starbucks is an extremely successful company. Executives have all these options. Do the baristas have options? Do they have those benefits? Starbucks is known to do well with its workers, but I don't know. Maybe that's right for a union. Apple, same thing. It's the wealthiest company in the world by market value. They've given out a lot of stock options to some workers. Do the people that are at that Genius bar and that sell you the phones, do they have the same benefits? Maybe not. And I wonder if tech, which built itself to thwart unions, didn't do a good enough job. And the unions are saying, hey, wait, there's some soft spots there because the companies are not giving 100% across the board those benefits. And why shouldn't they? And maybe that makes these companies ripe for unions. Shame on the companies, by the way. If you're Apple, you have no business not spreading the wealth all over the place. So if they're a little embarrassed and sheepish because the union is coming in, it's because they all but invited them in the door. Pay your workers.
I can remember from the 60s to the 2000s, every attempt at labor organizing in Silicon Valley, beyond, the maintenance people, and the janitors at night, failed utterly. There was no interest in that because the employees felt like they were on the inside of the game. They had a chance to get rich, and that unions were a danger, that they would destroy the magic of Silicon Valley. But I'm not sure there's any more magic left to destroy, to worry about. And I think now, it's kind of getting a 30s vibe to it, where we're seeing union organizing going on everywhere. And the unions aren't that much better at organizing, but they're having some real successes. And that could change everything as well.
I think the word you used, inside, is really key and the perfect descriptor. A lot of these workers are feeling like they're outsourced. They're not inside. And when you don't feel like you're an insider and you're watching everybody else drive off in their nice cars and their yachts and whatever, you feel like an outsider. And that's how the union can target you.
When I first joined HP 1,000 years ago, there were still people there that remembered Bill and Dave on stage handing out the annual bonuses by hand to every single HP employee. And HP had 10, 15,000 employees by that point. They knew their names, and that's so far gone. It seems like it's in another millennium. Well, it isn't another millennium. It seems like it's in another reality. I'm not sure that the modern executives of Silicon Valley have that sense of family. I mean, those guys came from blue collar families, those founders, and they really had the whole family thing going, even though they could be ruthless. Now they're all nice and drive their nice cars and they say all the right things, but I don't think employees feel like they care, that the bosses really care anymore.
No, they feel like outsiders, and maybe this is the shakeup that's needed to bring better conditions to that entire giant class of workers who feel like they're just not insiders.
Yeah, I think that's true. Okay, well, we usually end on a good note, but we ended on a dark one before we run out of time. That's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, Apple Podcasts, and LinkedIn. And did I mention YouTube? You got to check out our YouTube page now. It's humming along. Have a great weekend, and we'll see you next week. Goodbye.